Good morning. How is everybody doing? Appreciate y'all for being here. Let's check out the market. Thanks to you guys who commented yesterday and wished my sister a happy birthday. My sister didn't like the picture I put up of her, of course. That picture from the 80s. We were trying to discuss where it was. She thinks that picture was taken in San Francisco. I think it was LAX or Santa Barbara. But anyway, all right, guys. Well, let's look at the market. But man, my sister's getting old, and I'm 2.5 years older than she is. Anyway. All right. So the market gap down right here, it kind of gapped to like a nuance on the chart. Something something we talk about all the time if you follow the show. But this is actually a low volume node. Where it gapped to, that this is a daily chart, and we have a bearish gap down. And this is the bar that it's making right now on the daily time frame. But if you look right here, that it went to the exact lowest volume place on the chart. So it's like a gap on a chart level. So it's a great over underline. We would expect it to be, bullish above and bearish below there. Bulls definitely want to hold this, because if it slides through this and goes to the next high volume node, we're looking at 523 or 513, which is maybe what it's doing. We may just have to come back and maybe and make a low, but not a new low, make a higher low, and then rally from there. That could be what they're trying. But also, because this was approached from above, and I would expect buyers to be there. I would say by Friday, you would hope the bulls, or by Friday, the bulls want to have a backup here in this two-way action at 540, which is actually a high volume node. But the highest volume node on the chart is 515. The bears are trying to revert it down to that mean. It's just a game of statistics. All right, let's look at Bitcoin. All right, daily Bitcoin is going straight nowhere, but I wanted to show this. I made this wedge a few weeks ago, and on the shorter time frames, it is breaking out of the wedge and back testing it. It's bullish on the shorter time frames because it broke out, and then even when it back tests, it's held the wedge so far. Bulls are really trying to get it to 96,000. That would be a good area to aim for if you're a bull and trying to put on an option trade. But you got to get through this a low volume node at 90, where they might expect sellers to be there. So, but anyway, we'll see. But also there's the eventuality that it could just stay in this trading range that's developed here at 83,000. So let's go down to the 30-minute time frame. I'm going to look at 30-minute Bitcoin, and then we'll look at 30-minute SPY. Then we'll get on to the buffer report and stuff. And there's some new stuff in the AI. The AI service gave a new couple of signals. I have those out, so stay around for those. I'll share them with you. Okay, so in the shorter time frames, so here's this wedge, this longer wedge. Trying to show how to show it. Okay, so we broke out probably on the day of April 12th. Okay, so, and then we came back and back tested a couple of times, and so far it's held. Look, we came back and did a perfect back test on the 15th yesterday at 6:30. And we're blowing up right now. We're going for this. Bulls are definitely targeting 84.9. Call it 85. Call it 85. All right. So, and that's also a common trade, a common market profile setup, where in a bullish market you go back and you check the previous high volume node, and this could be interpreted as that action. This is considered bullish on a market profile type setup, or volume profile, which is what this stuff is over here. All right, so let's get on to some of you guys are more interested in. Let's look at, I don't know what to look at. Let's just look at my portfolio. I can't help talking about me. I'm down 56 basis points today. SPY's down, 1%. Bonds are down. Bonds are down 0.7%, and together they're down almost 1%. So I'm On a daily basis, I'm beating the SPY. On a since inception basis, I'm a little bit behind still. All right, so what else should we look at? Let's try to find this old buffer report over here. Let's look at, that's the old retirement simulator, which is fine too, but we don't get new numbers on it until Friday night. I just run the numbers on it once a week. I've given you the top 10 plays of this week according to the momentum factor. And it's all gold, basically. It's we'll look at them in a second. All right, so let's look at the index buffer report. This is a great place to start. We can kind of see what's going on. It looks like the SPY's down almost 1%, 0.9%. So we got tons of outperformance today on the downside, unfortunately. YSPY, XDTE, T-SPY. That's kind of the theme of the day. XDTE. You know why that was within XDT's case? It's because there was a gap down. XDT makes extra off gaps up, but it loses extra off gaps down, or gaps down penalizes its return stream. Maybe it's a better way to say it. OLS falls, down 2.4 again today. I hate to see that. I don't know what's going on with this VYLD. Did it stop trading or something? It was halted the first day it came out, but it came out like right before the market was down, 10% over a 3-day period. I was a little bit worried about this one. Okay, so I realize I am weaving, and VYLD, but I want to find out why this is, because I was worried about this. But it's brand new and it's from a big company. It's from it's not Vanguard. It should be Vanguard with a symbol like that, but it's from BlackRock or something. So anyway, it's still here. It's just for whatever reason the spreadsheet's not picking it up. And it's going straight sideways today. Okay, we're weaving back now. But I mean, there's just not a bright spot today other than YQQQ. And I guess that's the reason that my model portfolio was outperforming the SPY, because even though I sold a bunch of that at a really good price for a really good profit, I still have 14% of my portfolio in this. Man, what is going on here? GPTY is dropping. My Lord. All right, well, let's look over here. Let's look over here at the yield max buffer report, see what's going on here. The market's rallying. I'm watching the market in another screen. We should be back to 540 soon. I'm hoping, fingers crossed, on the SPY by tomorrow, or we'll see. I mean, either that or we're going to fail here and drop down to 525. I'm not rooting for that, or somewhere down that area. Yeah, 520, 525. All right, come on, bulls. Don't want that to happen. AMDY is back at it on the downside. So glad I got rid of that dog. NVDY, ditto. That's a dog. No, it's not. I'm just joking. It's just not. There's not really much good news in the market right now. MSTY is pulling back. GDXY. It's all about that. All about that gold, right? All about that gold. All right. So there's 6 of you watching. Cool. I'm so glad I finally figured out how to figure that out, how to see how many were watching in real time. All right. So let's look at something else. Let's look at GPTY. Let's look at the GPTY verse and that kind of stuff. LFGY verse. Let's see what kind of verses we have going on up here. Here is the LFGY verse. Now this is holding up great, but is this working? I wonder if this is working. It makes me a little suspicious of not working. Is APLD really up 8.72% after being down? It was down that amount yesterday. Yeah, it certainly is. It's up 7% here. So there's just a difference in the timing. Wow, that's that. Why don't I have some of this LFGY? This thing's not looking so bad today. Come on. I mean, I'm showing LFGY itself is down 72 bips. Yeah, so that's all accurate there. All right, well, good. The spreadsheets are working today. Nice job, LFGY. Nice job. Perfect. Maybe it's going to be a good day. The spreadsheets are working. The market's bouncing here. It looks like on the shorter time frames, it's trying to bounce. All right, so now here we have a different story. We got GPTY here. Gosh darn it. What are you doing to me? It's freaking NVIDIA. And AMD. That's the chips. So we know that new fund, Chippy, is going to be doing pretty poorly also. I would imagine. We haven't looked at it yet, but I mean, all right, GPTY, sorry to see that. We'll check out the Chippyverse, then we'll check out ULTY. All right, so here's the Chippyverse. I mean, the Chippyverse is ugly today. Let's check out Chippy and ULTY here. The Chippyverse is getting a little chippy. Been a heck of a rally though here. I mean, the past couple of days from the low 40s up, well, that one day, of course, to 50, but it settled at a price of 47 until today, and now it's trying to settle at 46, 45, something. Broadcom's their biggest position, then NVIDIA. All right, well, this is probably just a one-day deal, whatever, right? Let's check out ULTY. All right, ULTY, you got to love this dividend, trailing 12-month dividend, 167%, but it comes at a cost. It definitely comes at a cost, and the cost is right here, performance for the year. And this does not include dividends. It's NAV performance, negative 65. But you're making, that is that your dividends exceed the loss on the NAV. And it does not always work like that. It's because it's, but let's see how it's working for these guys today. Today, this fund, ULTY, is down 1.38%. Let's see why. They have TQQQ. That's not helping today. They have Planeteer. Planeteer's, down a couple of percent. Tesla's down a couple of percent. NVIDIA's down 5%. MicroStrategy is actually up 1.5. Carvana's down 2.5. Hoods down 4 and change, nearly 5. TNA's down 2.5. All right. What else were we going to look at over here? I guess that's it. Okay. So, retirement simulator, just in case I think it's really cool what I'm doing. I spent all weekend working on these metrics, but I'm doing the same thing Dorsey Wright's doing, except I think they just switched quarterly, and I thought it was too slow. It wasn't reactive enough for what I was looking for, and they only have 5 funds in it. To me, it was too concentrated. Although if you catch one of those, a concentrated fund during a rip-roaring bull market, I mean, it has its place. I'm not saying it doesn't have its place, but anyway. But I don't know why they didn't do 10 and didn't do a monthly switch. Now, I don't have point and figure charts, but there's millions of ways to judge momentum. You can use RSI. You can use moving averages, and not moving average crossovers. You can use moving averages is above, below type lines. Well, anyway, the best funds for this week, as far as momentum goes, this has nothing to do at yield. It didn't even look at yield. It's nothing to do. That's for you to decide. This is just the best funds as far as technical stock market strength. Which ones are performing which ones have the strongest price. Now, yes, lots of times those have the strong price because they have a big dividend and because they're on an underlying that's just on fire. Well, right now, the case with GLDI is the underlying is just on fire. Now, let's actually go back to, I wanted to look at GDX today, and then look at that. I mean, it's gapping up today. Holy cow. I didn't see on my model portfolio, but obviously that's helped me out too. I didn't notice that was up so much because if this is up, then that means GDXY should be up too. Not as much, and it's not going to, but GDXY should be having a good day, and it is. All right. Well, GLDI, it's not so much about the dividend with that one. It's about the underlying. GLDI's underlying is GLD. We're going to get to the trades of the day here in a second, and there's some good ones, so you guys want to stick around. But, when your underline's doing this, it would have been like buying NVIDIA, 5 years ago or whatever. It just goes up every day or whatever. I mean, buying NVIDIA at the, April of 2020. It wouldn't quite have been that good, but it's been a heck of a run for that. So anyway, that's all that the numbers, I'm calling it the max momentum factor, but it doesn't have anything to do with anything else. No quality, no risk adjusted return. That the theory is that, or a theory that technical traders use is, heck, all that stuff's encapsulated in the price. You just give me the price and I'll take it from there. Well, anyway, this is for those guys. So we have GLDY, NFLP, DIVO, MSTY, NFLY, QYLD, XYLD, FTHI, CHIPQ, MSFY. Those are the best ones of the week. The worst ones are PyPy, XYZY, ULTY, XDTE, XDT, QDT, ULTY, DIZO, Triple QY, IWMY. And it just means the least momentum on them. And it's just compared to the universe of the stocks I follow. And so it doesn't even include all the yield max stocks, because I could just use the ones that have been around a year. If something's not been around a year, my retirement simulator it can't work in there. So, but whenever something's been around a year, we just had some year anniversaries of some big stocks lately. I think ULTY last month. Anyway, I put them in the retirement simulator. All right, so now let's look at these. Let's look at this trade vision thing. This thing's pretty cool. All right, I was scanning the dark pools this morning. Let me just show you what I found. A dark pool is an off-market private exchange somewhere, but they still have to report the trades. But the theory is I'm not sending my 5-lot freaking Q put spread to the dark pool. I'm sending it to Tasty Trade. I guess they could send it to a dark pool. I don't know, but I'm sending it to Tasty Trade, and they're trading it on the public market most likely. Well, the dark pool is where Jay might be. He might negotiate an off-market deal. So it's more like we're institutions deal. But anyway, all right. So people were giving me. Somebody said something about it being too short yesterday, but that's what I'm looking for. I want it ultra short. I want to know what people are buying that they are today. Because I like trades that go out to Friday or maybe till next Friday, or I showed you one that goes out to next month. But that's about the distance on it. Well, anyway, but let me over here. This unusualness meter is important to understand. This will light up whenever it's an unusually large number of contracts in relation with the open interest or something. So these trades right here are big guy trades, and they're bearish, and they just happened 2 minutes ago. I just refresh. I also just get the fresh ones. But let's roll back and see the last one that was unusual. That one's only 2 bars. That one's only 2 bars. But there was a big unusual trade this morning. It was a bearish trade. It was somebody selling SPY calls or SPX calls. All right. So what the heck is this one? EQT Corp, sell a 52 call bearish. I don't know. I mean, small company. Maybe you guys know about that, but I'm just looking for something in the indexes. There's Carvana, something bearish that's unusual. That guy's selling calls. I was looking at it right at the open, and there was a lot of more unusual stuff. It's because big guys probably trade right at the open. Right now, there's not really much to look at. Okay, but anyways, let's look at this then. Stick with me on this. This trade, this thing's pretty cool. I'm starting to like this. Okay. First things first. We got a new breakout candidate. Though I gave you guys one yesterday, but it was so small. It was $1. I mean, unless you guys play penny stocks, it was what? IRSG, ISGR, or it wasn't that one. Anyway, today there's one that's a $28 stock. So I immediately start thinking, is this a will candidate? Or, you know, because this is a stock you could sell puts on in theory once you did your research, and you know you only have $2,800 worth of risk per put. Anyway, but it's called Materials Corp. I've never heard of it before, but you could see the last time. So let's see here. I was looking at this today. They called another breakout trade right here at 21 and then got him out at 24. But in the meantime, it went up to 26. Anyway, you could sell puts there. Like, you know, I was looking at the different ways to do this. There's another one down here. They in at 13, out at 20, in at 21, out at 23. But anyway, we're back in. So, you know, I don't know. So, but all I care about, I'll let the AI do the thinking. It's like I said yesterday. Okay, so that's the trade. So here's two ways to play it. And we don't want to even, I want to go out a month and lots of times and give these small ones, you know, time to play out. But these stocks are cheap. Look at this. I looked at doing a 3-way risk reversal, selling puts to buy calls. It's not even worth it. You can make like a $90. It's not worth it. Just trust me. This, you could just, you're better off just to spend $100 and buy this call one standard deviation out for next month. And if this thing makes a big move, and you know, you'll be along for the ride, but if not, you'll just lose $100. Anyway, that's the breakout. That's a breakout trade. But don't do that trade. That's probably not a good trade, but research that company for me and tell me if there's anything about that company. Do we need to start watching that company? Breakout counter calls only. I did it another way here. I wanted to show you guys. You could do it with the 3-leg. It's an $80 credit on $720 loss. But if it's really a breakout candidate, why not just buy the call? So I looked at just that 35 call right there is what you're going to try to buy if I did the risk reversal anyway. I always try to buy the call that's one standard deviation up. Well, or I typically do. So the other trade just buys the call, just drops these other 2 legs. And I really don't think it's to make $80 to risk 720. You can do it. It's up to you guys. I mean, it's up to you on that one. Anyway, so I showed 2 ways. Well, I don't know if I'll share those on Discord. Or if anyone wants those, put it in the comments. But okay, afternoon. So let's look at how yesterday's show, we did a breakout trade in snow. It was the same thing. I think it was a breakout candidate or something anyway. Oh, there, it's making money right now. So it's fine. And then we're talking about this C&K, Cinemark drive-ins. These are boring trades, diagonals and poor man's covered calls. The trade of the week, and it was going long in Bitcoin, looking for a rally in IBIT. But then hedging it with puts, in this case, the Russell, because that's been the weakest. Well, anyway, both trades are down now. So that's lots of times. Sometimes the hedge doesn't work. The long trade's down $13. The hedge is down $21. So if a guy did this and that's all he did, he'd be hoping for the market to go down or Bitcoin to rally here. But anyway, these kinds of trades were working out great a few weeks ago whenever volatility is going up. That's the other thing. Volatility is coming down. And this is a long vol type strategy and trade. And that was until this morning. All right. Well, anyway, what are you guys up to this morning? If there's anything you guys want to talk about, let me know. And we can cover it. Hey, Ethan, I was sorry to, okay, the strategy, pros and cons. It's going to have to be a video, dude. It's something called, they're like on BTAL. I'll just tell you real quick what I know about it. BTAL, for instance, I don't know if this is how Chaos does it, but it's how BTAL does it. So let's look over here at BTAL while I'm talking about it, while I'm weaving over into this lane. Oh, that's something else I wanted to show you guys. Well, anyway, we'll talk about that later. Hang on here. All right, BTAL, it's an anti-beta fund. So which is a fancy way of saying it should move opposite of the market. When we look at correlations, and if you look at a correlation of 1, it's perfectly correlated to the market. If you look at a correlation of 0, it's perfectly uncorrelated to the market. If you look at a correlation of -1, it's it's inversely correlated. Well, anyway, I think chaos does something similar. I think it's a similar type strategy, but what these market neutral anti-beta funds do is they look at the universe. I'm going to simplify it. They look at the SPY and they take the 10, their computers, their quants take the 10 most volatile, the 10 highest beta stocks. In other words, the ones that are the most risky compared to SPY. So they get NVIDIA, they get Planeteer, whatever those 10 are. They go long those. And then they go short whatever the 10 least risky stocks are, the least volatile. So they get Coca-Cola, they get Verizon, they get Berkshire Hathaway, whatever those are. And they go long those. They go long both of them. But that's their hedge though. They own the good stocks, but they hedge it. Or actually, I'm sorry, no, that's what they do. They short the good stocks. They're actually shorting NVIDIA and they're buying Coke and Verizon. So it's a pairs trade. So and they're buying Clorox, Coke and Horizon, long those, short NVIDIA, Planeteer. They do great when the market goes. They do great when the market goes down because it's like so chaos. I don't know. Chaos does something similar. Let's see if I can tell by the name Alpha Architect. And it's tail risk, so it's probably different. I've done a report on it before, but I forget. But I love chaos because it doesn't bleed. Chaos is the opposite of theta or THTA. THTA, which is a great fund. I mean, Jay manages it. No disrespect to Jay. A lot of people like this. A lot of people like to do iron condors and these types of trades, but the reason I don't do iron condors, it gives you a return profile like theta has, where you creep up or sideways, which is fine. You make a little bit of money, just like a bond. Part, yeah, I'm down with that. But then when you have some kind of dislocation of the market, like August or whatever, you take it on the chin. And the bigger the dislocation, the more on the chin you take it. So not that there's not a place for those types of funds. They probably have a place, but chaos somehow reverse engineered this return stream. Because look at this return stream. It's like they're shorting. Maybe there is somehow they have they have a way to creep up during the good markets. They don't bleed, but then they have a way to to explode during a bad market. Now you can see though, even though they exploded from 88 to 92, 4 points or whatever, they've given back that whole gain, and they're only at 90, from 88, which is still pretty dang good. It's like THTA in reverse. Remember, I was telling you on THTA, they do the opposite. They have a gigantic gain that's way too high. They're never going to hang on to, or a gigantic loss. They went from 19 to 13, but not really, because they're really trading at about 15. But 19 to 15 is still pretty bad, or it's still bad's the wrong word, but something you have to be aware of. I'll look into the strategy on chaos. I'm sorry, I don't know. So I have a guess on TEL. Now, TEL, I think I can tell you. Why does TEL lead? Okay, TEL, all they do on TAIL, and it definitely has a place. It definitely has a place, but you kind of might use it like you might use TQQQ. When you're bullish, use TQQQ, but you don't want to hold TQQ through a bearish time. I mean, because it loses triple. So lots of times people will use TQQQ like options. Like, okay, I'm going to get it, I'll get it, and they'll write it up for a month and sell it. Or that's the way you're supposed to. You aren't supposed to hang on to it because of the volatility erosion related to the options. But the opposite, you can have the opposite situation on some of these other stocks. All right, hang on here. I had something else I wanted to talk about. I just thought about. Oh yeah. So on the tail though, specifically, that's what I was going to show you. This is what I want to talk about. Cambria tail risk. What all they do on here, and I have looked into this before. They own the portfolio of puts. They just there's different funds do different ways. Some funds like have the SPY, and then they spend like they ladder puts. They spend 1% of their assets under management on a put hedge or whatever, but they constantly own puts and they know they're going to bleed. That's designed to bleed, and that's fine, because what you want to do is don't buy this fund and hold it. You buy this, you can have TQQQ during the good times or whatever. I mean, whatever, ULTY, it doesn't matter. Have whatever during the good times. And then when you see a bad time coming, like a couple of weeks ago would have been a great time to pick up some TEL just for a hedge. Same way people use UVXY. When TEL was down here at 11, even when it started going up when it was at 12, even if you bought it at 12 or whatever, and it went back in a pullback, you go, man, I bought it too high or whatever. You're happy the next couple of days because now it's trading at 13. It's the inverse of the iron condor. In tail risk funds, the big explosions benefit you, but you bleed because they own puts and puts bleed unless the market goes down. And, right here in August, the fund went from 11 to 13 and a half, and then, but gave it all back within a couple of months. But you could have just had it through the August pullback. That's the idea. It's like anything else. You just buy it when it's going up, sell it when it's going down. I mean, how do you know that in advance though, right? Okay, so let's look at UVXY. This is a lot of people use UVX. There's an influencer I follow that bought UVXY prior to the crash in 2020. And it wasn't a FinTwit influencer, it's a computer. It's just a random deal. It's a different type of influencer that also sometimes talked about the market, but I didn't follow the influencer for market trade. The influencer's dad showed her how to do it. She made enough money to buy a Model S or a Model Y or something. Maybe anyway. I'm trying to show it here. So that's weekly. So here's UVXY. Now this is a fund that erodes, but you can see back here, and I can't go back far enough, maybe monthly UVXY. But anyway, you can see when if you can just buy it and hold it for 3 weeks, whenever the market's pulling back, you can do well. But on the monthly chart, you can't even get enough. Holy cow. There's not even one up bar on a monthly basis. That's crazy. Well, anyway, but it's similar strategy. So quick in, quick out. So traders only. But so here's my deal though. With these options, anything can be done. You look at Chaos. Chaos was reverse engineered THTA and made it where you have the good parts and you don't have the bad parts. And in fact, the bad parts help you out. Those are the types of strategies I'm interested in. Look at because look at this. Let's look at, now this is hindsight, but here's another use case. And of course I didn't think of this in advance, and lots of stuff. In other words, lots of stuff that you can find when you're just thinking of stuff. It looks great in hindsight, but it doesn't mean it's the be all and end all. But look how good this freaking thing would have worked. Let's just say you bought BTAL at the start of the year, but you also have ULTY, because of course ULTY is, pays 162% yield. But you need to protect yourself too. Well, you could get half of each, and you only have an 80%. And this is in hindsight, and I mean, you only have you're only getting an 80. You're only getting half that yield from ULTY. But I mean, they almost look perfectly inversely correlated. I guess we could look at this on a correlation chart too. Asset correlation. Let's just check it out this way. Let's check out SPY to BTAL to okay. So I always put SPY in just as SPY is the benchmark, of course. BTAL. It doesn't have to be. You could use Qs. Chaos. Qs are the benchmark of this century. SPY is the benchmark of last century. All right. Chaos or last day. I don't know. BTAL, chaos. But then let's look at some bullish funds like ULTY, YMAX, and what's just mega bullish. What about TQQQ? And then we'll look at some bearish SQQQ. And then let's look at, how about let's look at something that's inversely correlated to SPY like bonds or maybe even TLTW. All right. So then let's go here. Daily returns for 120 trading days. Is there anything new in there? There isn't. So we might even be able to get monthly returns on that one. Let's see if we can get monthly returns. Yeah. Okay. So this is okay. This is pretty interesting to me. Okay. So here's the course. So BTAL is negative 70. So it's 70% perfectly inversely correlated to the SPY. I should have compared it to ULTY. I guess we can look at ULTY and go to be okay. There it is. And ULTY to BTAL is negative 82. So they're good hedges for each other. BTAL over this time frame could hedge YMAX also. Now you can also look at TLTW to SPY is only about half correlated. It's a 57. So it gives you, that's bonds, and that's, I always say bonds and stocks generally go the same direction, but bonds give you a little diversification because in big dislocations of the stock market, there's a flight to safety. We saw that the 60-40 did decent. I mean, in this last pullback, I thought until lately, and then until the bonds blew up, they were doing great until the bonds blew up. But yeah, other than the bonds market almost blowing up, I forgot about that part. Prior to that, they were looking good and diversifying well. So let's do this. I'm going to put it on daily returns. Let's zoom in a little bit more. And I want to add YQQQ because nowadays we can use this to diversify to protect an account that has a bunch of alti in it. It's making huge dividends. How can we do that? Well, here's some ways to do that. Okay, so BTAL is not as hedgy. It's only a 64, where chaos is a 77, whereas SQQQ gives you a negative 97. SQQQ locks out pretty much all the downside, evidently, according to this, over the past 120 days. But YQQQ does a good job too. It's a negative 0.86. So look at that. Then see why I like this fund so much. And I haven't even seen this before, but this is another reason why I like this. It has more protection capabilities over this time frame than BTAL and Chaos, which are really good funds. But another thing, it pays a 20% dividend, which I do not believe. It's Chaos and BTAL, and they pay a small dividend, but they don't pay 20%. I mean, it's a good fund. It's been doing well for me, and I recently added some TLTW. Look at TLTW is only a 9. That means it's almost perfectly non-correlated. 0 would be perfectly non-correlated. So that's a great diversifier. Now let's put GDXY in here as well. And you guys can do this with your own stuff too. And I hope you are. I mean, that's why I'm showing. Hopefully you guys are. But this, put in your own, put in your own stuff and see what you got. Okay, GDXY is about half correlated. It's a 44 on a scale of 100. But this is interesting too. So go over here. Now this is over the past 120 days. So this has been a bad time in the market. So the return, this shows you the return of these strategies. Of course, triple leverage Qs down 21% over this time frame. Even if you would have had half your money in BTAL or Chaos, they were only up 4 or 5%. Now, if you would have had half your money in gold miners, they were up 15%. Gold miners, so basically you get the idea here. Gold miners were up 15% in the past quarter, but the money came out of, look at this, and TQQQ lost money and SQQQ lost money. Right? Now that is one's long and one's short. That's volatility erosion. That's what erosion is. And that happens because TQQQ, SQQQ own options, or they may do it with banknotes or whatever, but they own convexity and they own, they're long, they're triple long or triple short in the case. But anyway, I thought that's interesting. But But that's been pretty much the story. The other, unless you're in chaos or BTAL, or GDXY, there hasn't been a lot of good news. I guess we should have put ULTY in here. Why didn't I put, because ULTY is what we're trying to hedge. ULTY, right? All right, so ULTY, let's go down to ULTY's line. I think I'm out of space. I don't know. I don't see ULTY. Oh, there it is. Okay, so ULTY to SPY it's 84% correlated. It's basically it's a bullish fund. You should get 84% of the SPY's action. It's not going to hedge much. In other words, it's going to, which is fine. BTAL though is negative 76 to it. Chaos only hedges half because it's a negative 50. And of course, ALTI is a perfect hedge for itself. That not surprises. ALTI and YMAX are 92% correlated. That doesn't surprise us. ALTI and TQQQ are 86% correlated. That doesn't surprise me. And ALTI and inverse Qs is 86% reverse correlated. So, but once again, ALTI to TLT and TLTW are good diversifiers. Maybe a good portfolio is a little ALTI, a little BTAL, and maybe a third ALTI, a third BTAL, and a third TLTW. I mean, I'm always looking for bulletproof type where nothing bad could happen to it. You got a third bonds, a third ULTY, that's your income generator, but TLTW generates income also. Was it pay 15, 20% something? And then a third in BTAL or chaos. I'm still deciding. Or maybe a fourth BTL, a fourth cap. Anyway, that's what this kind of stuff's good for. It can help you plan your, plan a portfolio campaign. But anyway, let's go over here. The last column that's really interesting to look at to me is the annual standard deviation. Think of this as the VIX for this. That's the vol. So the VIX, the VIX is 20 is about average, 15 to 20s, whatever, right? 12 is fine too. So the SPY has a VIX of 13, BTAL is a little bit more volatile. It's volatility of 15. Now, chaos has almost no volatility. If it had a SPY, it would trade at 1.5. Now, ULTY is a 21 volatility on this 120 days. So it's been twice as risky as the SPY. Okay. YMAX is a little bit less risky than ULTY, but still way more risky than the SPY. Now, TQQQ, that's why you aren't supposed to use very much of this. And it had, not to mention the volatility erosion, but it's 3 times as risky. And we'd expect that because it's triple leveraged. Bonds, TLT is about as risky as the SPY. TLTW is even a little less risky than the SPY or TLT because TLTW sells options. And selling options gives you a buffer, right? Same reason if I pulled up JEPQ, let's pull up JEPQ. JEPQ would be less risky, or not JEPQ, JEPI should be less risky than the SPY. Same thing. It has the SPY, but it sells options. Whereas, JEPI's down the bottom. JEPI's an 11, where the SPY's a 13. So it's slightly less risky. That's what selling options does for you. The GDXY is about twice as risky as SPY, but of course we've got the return here too. The return and risk go together. This is everything you need to know right here. Annual standard deviation, this far right, that's how much risk you're putting on. But you want to know, but right here, the correlations are how you can plan how much to allocate, especially if you're trying to balance out short and longs. And then you have the, and it's interesting to look at this other stuff too, to look at the return and just to see how you've done. If you want to just do it over the past, look at this. Let's just do it over the past quarter. So we just catch, the quarter's about, we're about 110 days into the quarter. Yeah. So this is basically year to date. This is year to date correlation. So anyway, this is a good thing. I may just keep this screen up. We may just start looking at this because this is a key to know and to understand for the stuff we're trying to do. And I'm trying to show you guys how to do. Anyway, I know Ethan likes that kind of stuff. So you combine whole chaos. I mean, talk to your planner. I can't give advice, but if you look at the chart, it would appear that chaos is buy and hold, and TAIL is for special circumstances only. It would appear just by looking at the chart. Like I say, I'm not licensed to give advice. I don't want to get in trouble. Now, plus, I don't want to tell. The real reason is I don't want to tell you something so I can buy in whole chaos, and then you buy in whole chaos, and then there's something that happens to it that I didn't foresee that's in the prospectus. If I would, and then and it's down 10% next week, and you said it was okay for me to buy. That's what I'm saying. I'm not a professional, but yes, looking at the chart, it looks like chaos is the type of asset that is holdable over somewhat of a period of time, as opposed to like UVXY and TAIL and even TQQQ and SQQQ. I would say on those, and those are for, maybe think of them in 1 week or 2 week time periods. I'm going long for 2 weeks, going long for a month, but I mean, all right. What's another like chaos? Well, let's look here. Oh, no. Okay. Sometimes it says similar funds. Oh, look, this is cool though. It's held by this. I've never heard of this. Is a good way to find. I'm weaving again, and I'm sorry. Anyway, but this is a good way to find ETFs. Look at this one. This thing's called Mood. One thing, I love the ticker. It's a cool ticker. The other thing, let's just bring it up. The other thing I like is that it's holding this fund that I like. So, I mean, maybe we should end this by a company I've never heard of. Pays a tiny dividend, so it's not a yielder. Money's coming into it. Flows are positive. Let's see how much money's in it. 30 million. Okay. So that's about where the Jay said the break even is. That's fine. Performance year to date, it's up 5%. Return, 10%, and that factors in dividends, which it doesn't pay very much of. So top 10 holdings, it has some bonds, some BlackRock bonds, some gold. Yeah, this is a cool fund. I don't know Mood, what it's for, or whatever. We need to do a report on this. Anyway, you guys get the Relative Sentiment Tactical Allocation ETF. This cannot be any more up my alley. All right, I'll make some content on it. But anyway, okay, weaving back to what we're weaving to. Here's another way to look at it. Go to finance charts. Is finance charts not loaded in here? And go to chaos, and then chaos peers key metrics. So they'll give you peers, and these sometimes they aren't what I would consider real peers. They might give you another fund that does a different strategy that's not even related, but it's options also. But anyway, it's a good place to start. And one, SPY is not a peer, but anyway, Hilo, that's an instance. Hilo is a hedged equity, a laddered hedged equity type situation with JP Morgan, 2.7 billion under management. I don't know if you could really compare it to chaos. It's like chaos in the fact that it's hedged, but it's definitely not like chaos. So they have ACIO, which is Aptus Collared Income. That's the same thing. That's a collar. It's not chaos. They have NBOS, Newberg Investment Trust. That's a collar also. I've looked at that. HEQT is a collar fund that's a good one that I like. I want to do some content on that. It's a Simplify. I'm starting to really like Simplify more and more. Anyway, there's a Fidelity has their product. Just like everyone has a covered call product, everyone has a hedged equity product. A hedged equity product is a covered call, but it's a collar. It's where they own stock and they sell a covered call, but use the proceeds to buy a put. And they, instead of giving you the money, instead of saying, hey, we're going to hang on to the money and buy puts with it, so this thing's not going to lose too much in a down market. And HEQT did pretty dang well. Okay, but here's one for you. Amplify Black Swan Growth. Let's see what this one is. We'll compare Swan and Tell. Where will I do that at? Do that at right here. We should put Swan and Tell on our. Well, gosh darn, what am I doing? What am I doing? Swan. Let's compare these just for the last quarter, Swan and Tell. Okay, so Swan's a bleeder. I don't know what Swan's program is, but I don't like what I've seen. But let's go back further. That's only 3 months. Maybe Swan's a bullish fund. Maybe it's for a bullish swan. I mean, you can have like a white swan. Prince Charming, the swan, shows up. That's what would happen if we would end the war in Ukraine, or in the wars. And that's the number one thing we could do right now that I think is in our control to do. That's frustrating to me why we aren't doing it. It's just end the wars. Anyway, all right. And I'm usually kind of a warmonger. I like it. I'm just joking. But anyway, but we need to end these wars. All right. Swan. So look at this. It's a bull market fund. I mean, it's total return up 10, average. Anyway, okay. So I need to put, if you're in Discord, Ethan, put it. We need to make a new Discord on funds I need to review, a new room. But help me remember to put Swan and what was that other one? Mood. Swan and Mood need to go in on the list. Anyway, help me remember, Ethan. Or Grateful Trader. All right. Well, I'm thinking about getting out of here. I could talk about tail risk funds all day long. Thanks for asking those questions, but I appreciate you all for being here. And I'm looking at the market. We're up. We're on a high for the day. Let's look at the market, I guess. But yeah, remind me to review those funds. I need to get those. That'd be a perfect review. Swan and let's check out SPY. Little 30-minute SPY action. You mean we're just grinding? It looks like see how we're grinding, but we're pulling towards this. The high volume nodes, think of them like a magnet in a science experiment, or two magnets where they have a positive and negative charge and they're attracted to each other. But think of on the left hand side, you have a negative magnet in one hand, and you have a negative magnet in the other hand. As you slide by the other negative magnet, you'll either want to go right through or it'll back you through the other way. It won't want to stay there. You'll get that's where the low volume nodes are. The high volume nodes, and that's why they're high volume nodes. They've attracted prior price action. There's trading range there. There's maybe support and resistance there. Maybe there's institutional orders sitting there. Whatever the case may be, that's where the big institutions need the price to be for retail to experience the most pain. There's a theory called max pain effect. But whatever the case may be, the high volume nodes act like magnets. The low volume nodes generally repel. So let's say by the same token, if we rallied up tomorrow into this place where we had no volume from this side, I would expect sellers to be there, and they would probably try to get us back to this area. And that's where gravity would take us. However, let's say it gapped overnight, because let's say the war did end overnight and it gapped past this area or something. Well, then even if it settled, it would probably settle back down to this high volume node at 560. That's why overnight gaps can be so important. And that's why understanding these, this volume profile and knowing these areas, anyway, it really helps me. I hope it helps you. But anyway, that long way to say we're rallying right now. We're rallying. We're into this gap from this morning. We could put a bearish gap from this morning, and I should have. I don't know why I haven't yet. But it's because we're already inside another bearish gap, and yesterday's is looking like a failed breakout. So anyway, it's all looking bearish right here. We just need to get it. We need to get up here to 560 is where bulls want to get it. But in the meantime, bulls would darn sure take 540. 540 by the end of this week and 560 by next week if you're planning a campaign with options. All right, guys. I appreciate y'all for being here. You have a good day. See ya.